Market is king here on Business Morning. So let's get back to the trading floor at the Nigerian Stock Exchange. Wale Olusi, who is the acting head of research at United Capital, is there to take us through this final lap of the program. Wale, it's good to see you again. Good morning.
Morning, boss.
Yeah, thank you.
Pleasure to be here.
Yeah, great. Thank you to have you on the floor. So, you folks at United Capital had a very small report. You talk about the macro headlines, the PMI and the GDP. What does those two numbers tell about the economy, and is there something in there for the market?
Well, what we've said in that report is that over the last couple of months, we've seen a consistent relationship between the PMI released by the CBN and the GDP numbers that we've been seeing from the MBS so far. The last one for August suggests that there's a sustenance of, an uptick in terms of how the manufacturers see the momentum of activity within the economy. But GDP for Q2 was quite slow, no thanks to the agri sector. If you look at what is happening between the farmers and the herders, of course, we also know what's happening in Apapa, where Nigeria has its major ports. That gridlock is also a concern for the economy. And what we think the policy makers should do is to take an eye off politics a bit and consider the momentum we've been seeing in the economy going forward.
Yeah, so how do I trade this momentum with the stock market taking a bit of a beating and investors are asking for higher yields on debt papers?
Yes, we are not surprised to see what is happening to yields. So far, we've seen, a very upward sloping yield curve. Seems like investors are concentrated at the shorter end, and now they are asking for higher yield. And we saw NTB rates last week, take a uptick. Clearly, they want more. The DMO, the CBN, does not want it to give the market earlier, but clearly, it looks like with the increasing risk in the polity, something has to give, and we think there's a likelihood for even the shorter yield, at the shorter end of the curve, there's a likelihood for yields to continue this uptick that we've seen, at least marginally, compared to the sharp decline earlier in the year.
So for you folks at United Capital, what's your playbook for the equities market?
Okay, so for equities, clearly everything suggests that the market has met all our bearish case for the year, currently doing about 8.7% negative. We have earlier projected that if the trade tension in the global economy, is maintained the way we've seen it since January till date, and investors expect the risk in the polity to escalate, then the markets will clearly close bearish at around 8.2% by the end of the year. And it looks like our bearish case is playing out clearly. We will not change that view, except we see strong changes in the global economy and some more clarity in terms of how investors see who will eventually win the 2019 election. From all indication, that does not seem clear now. So we expect this bearish momentum to, likely continue. It seems like the market will stay choppy till the end of the year.
Wale Olusi, thank you very much. The acting head of research at United Capital, live from the Nigerian Stock Exchange.